exaggerating to say that this is what we should all be talking about, but we're not?
Absolutely.
I'm not exaggerating, am I?
Not slightly. Every person that I come in contact with in the public, I ask them, do you know what a CBDC is, or a central bank digital currency? And nobody knows. But the Bank of England have been researching this for years. It's been on the card for years. But unfortunately, the government like to manage perception.
Yeah. Why would they be worried about us understanding this in more detail?
Because it's money that can be programmed, which means that they can tell you when to spend it, what to spend it on, and how to spend it. And they can also assign government agendas to the spending. So, for example, if they think that a certain area of the economy needs more stimulus, they'll push you towards that. If they think that we shouldn't eat as much meat, they'll stop you from buying meat. If they think that you've flown on too many holidays, they will stop you from going on holiday.
Now, that sounds like the stuff of a dystopian nightmare and a fantasy.
So we see these two ladies here talking from the Bank of England, and this is a UK news station, but they're telling you what's going on. This just isn't happening in the UK. This is happening globally. Central bank digital currencies, aka CBDCs, are coming to you. And what this means, how it's going to be monitored and regulated, that's still to be determined. But all in all, you're seeing that paper money is going away. Fiat is going to be a thing of the past. It's going to be digital, the digital ecosystem. And right now, what's the base layer of digital ecosystem? Bitcoin. Bitcoin is the one crypto that all these thousands of other cryptos have spawned off of. Some of the other altcoins do have use case, but Bitcoin is that digital base layer. And right now, you're still early. As you see, Bitcoiners, there's only 100 million of us. Right now, there's 7.7 billion no-coiners. So if you get in right now, you're earlier than most. You can still be in that 1%. And taking a look at the Bitcoin price chart, what do we see? What do we anticipate? And what are we looking at? So right here, we see that we did have this downwards resistance. We've showed you this quite a few times. We busted out of this. Mind you, this is on the weekly chart. So this is definitely a good trend change indicator. And we've had this retest and a bounce up for this first wick, for this first candle. So look here, the VPVR is showing us that from about where we are right now, around the 24/7 level, there's little to no resistance, really up until we hit around the 28.2K range, and the first really big resistance around that 29.3K range. So the next big cluster would be up to around the $37,000 threshold. So if Bitcoin can get back above that $30,000 level comfortably, we could be seeing the high 30s, then into potentially $40,000 in the short to midterm. Taking a look at another Bitcoin chart, we do see a similar pattern from cycle to cycle. So this is back in 2012, 2014. We made a peak, come back down, and sort of bottomed out, and then broke the downwards resistance, and then came up, made a new peak, bottomed out, formed some resistance, double bottomed out before breaking this downwards resistance to ultimately making that new peak. Look at here where we are right now. We retested that upper bound, didn't get it back above it, came back down, and if you're going to rinse repeat, what's Bitcoin going to do? As you see, like in 2012, we went almost all the way to the apex before we ultimately had a breakout. But back in 2019, 20 bear market, once we break out of this, this was near the halving. We broke out of this and made new all-time highs. This apex isn't all the way till November of 2024. Are we going to wait that long? Probably not. But this can be drawn in another way. Let's zoom into this price action so we can take a look. What do we mean? So this is using the April of 2021 peak, even though we did put in a higher high in this ABC irregular pullback. But the RSI did top out here, so that's why we used this the first time. So if we draw another line and use this $69,000 level as the peak, really the first time we hit our head, we do actually see that we have broken from this downwards resistance level. So are we already out the woods, or are we waiting to see this trend line here? And you see this apex only goes to the summertime. So no one really knows until the pattern plays out, but if history's any indication based off of the form and the structure, it's probably going to be this upper bound. So just keep that in mind. Update from Stock Money Lizards, we're seeing a similar pattern from 2019 to where we are right now in 2023. So looking at 2019, we see that we did bottom out. We had this Adam and Eve pattern, and then once we broke above this neckline, we got up to level 1, then level 2, then ultimately a blast off. Well, look where we are right now in 2023. We had this washout. It's a little bit different though. We had an Adam pattern, then an Eve. We have 2 Eves here. And right now we are on this level 1. We've had this bounce up. So we'd be sort of equivalent to about right here in 2023 before this rip up to the upside. This went from about $5,500 up to about the $8,500 range within a month's time. This was in May. So are we about to see that in the upcoming months? Are we going to see this rip up to maybe $28,000, $29,000 before we sort of lull out, create a new base at that level before ultimately having that run up into the summertime? Definitely could be something that's in the cards for Bitcoin. Got to pay attention to the market. This could be risk on going into the summer. We'll keep you informed. Before we continue, we got a lot more for you this video. Make sure you go ahead and check us out at Bitcoin Bros 26. And if you haven't subscribed to the channel, make sure you go ahead and show us some love. We do these videos every single day for you, and we appreciate all your support. But we have an update from the crypto OG Arthur Hayes, the co-founder of BitMEX, and he's telling us what the next steps he's looking to do into this market. Let's check it out. So right now, he's saying step number 1 is a correct thought. You need to have a perfect setup. Right now, it might be a time to get into the market because he thinks there's about to be an uptick in the market. We'll talk about that in a little bit here. And then he's also saying to raise cash, buy Bitcoin, and then he's also saying let's go S-coining. So right now, the strategy, if you read this is like a 20-minute read. We urge you to read it. You can check it out on his page once again. But also, when you go looking into altcoins, you just want to be more heavily levered back into Bitcoin and play with a small percentage of your portfolio, because these are times where no one really knows what's going to happen, but you can look at trends based off of history, based off the 4-year halving cycle, based off other indications on what the Fed's doing, which we'll look at here shortly. But you don't want to go full all into altcoins as of yet. There will be a time to take more risk on. Right now, you can start nibbling a little bit. And then the unwind. What to look for when the TGA hits 0, get out of the market. So you might be asking, what's the TGA? The US TGA drops in line with Arthur Hayes' market prediction. If you don't know, the TGA is the Treasury General Account, which is the US government's operating account, sort of like a checking account that's maintained by designated depositories, primary Federal Reserve banks, and their branches to handle daily public money transactions. So there you have it, what the TGA is. What Arthur Hayes shows is that the TGA dropped to $439.7 billion. At the time of this writing and the time of this recording, it's around $400 billion. So that dropped over the past week and a half. And if you look at this here, this will update in the next business day, but you see 439, but the TGA is inversely correlated to risk on assets, because you got to think of when they put money into the market and this falls, and they're using that extra checking account that they have, and they sort of stimulate the market, they're sort of creating a sense of a false market, because what's happening is they're using these additional funds, but also they're still raising rates. So historically, when they take liquidity out the market, they're not pumping any money from the TGA into the market. They're not talking about this, but this is what's going on behind the scenes. But if you zoom into this price action, you can see that the TGA on this chart showing 439, which it mentioned that in the article, well, now that has fell down to this gray line here around 400,000. So will this continue to fall? If this continues to fall, we're going to have a very parabolic run up to the upside. There's a lot going on in the markets. It can be stressful. It can make you lose sleep if you depend on how you're positioned in these markets. But remember, we're still in a bear market until we're not. The trend's your friend till the end. And looking at Bitcoin, we still are in a downtrend. The ultimate trend is down. Looks like we could be getting ready to change that and go up to the upside. That's a possibility. And we could have a rally going into the summer. But the trend's your friend till the end. But as Arthur Hayes said, when the TGA hits 0, get out of the market. No questions asked. You can have your HODL bag. You can keep that. If you got money into Bitcoin, you can hold that long term. But getting out the market with any additional money you're spending right now to potentially ride this upwards rally into the summer, watch the TGA when it gets low. And note, it's never really hit zero. It's got close a lot of times historically. But once it gets down to these lower levels, almost to zero, probably the best opportunity for you to get out the market. And with that, I'm Sean with the Bitcoin Bros. You guys like this content, go ahead and smash the like button. If you haven't subscribed to the channel, go ahead and show us some love. We appreciate the support. With that, that's all I have for you today, and I'm out.